When people hear the word scam, they usually imagine fake websites, fake coins, fake giveaways, fake influencers. But the biggest crypto scam is often something completely different, something much more dangerous, because it does not steal money directly. It steals time, it steals attention, and eventually, it steals financial futures. That scam is the belief that wealth can be built quickly, because emotionally, people love shortcuts, fast success, fast money, fast freedom, and emotionally, that idea becomes incredibly attractive, especially when life feels difficult, because difficult situations create emotional vulnerability, and vulnerable people become easy targets. That is why scams work so well. Not because people are stupid, but because emotions become stronger than logic, especially greed. Because greed changes behavior quickly. People stop asking questions. They stop researching. They stop thinking carefully. Because emotionally, they already see themselves winning. And that is dangerous, especially in crypto, because crypto attracts dreams, financial freedom, independence, opportunity, and those dreams are powerful. But dreams without discipline create risk. That is why scammers rarely sell technology. They sell emotions, excitement, urgency, hope, and emotionally, those feelings cloud judgment. That is why so many scams use the same language repeatedly: guaranteed profits, limited opportunities, secret strategies, exclusive access, because emotionally, people fear missing out, and fear of missing out creates impulsive decisions, especially financially. That is why many investors lose money before understanding what happened, because emotionally, the decision already happened, before logic had a chance to respond. That is why education matters, because education slows people down, and slowing down reduces emotional mistakes, especially online, where information moves incredibly fast. That is why experienced investors often sound boring. They ask questions, they verify information, they move carefully, because they understand something important. Anything promising easy wealth usually deserves more skepticism, not more excitement. That is why protecting capital starts with protecting attention, because attention shapes decisions, and decisions shape outcomes, especially financially. That is why the biggest crypto scam is often not a fake project. It is the idea that wealth can be built overnight. Remember, please, fast money attracts attention, but patience builds wealth. And this is where everything changes, because once people understand how scams actually work psychologically, they become much harder to manipulate, especially emotionally, because scammers understand human behavior. They understand greed, they understand fear, they understand urgency, and they use those emotions constantly. That is why emotional awareness is one of the strongest forms of protection, especially in crypto, because crypto moves fast, and emotionally, fast-moving environments create impulsive behavior. That is why patience matters, because patience creates space for thinking, and thinking carefully reduces mistakes, especially expensive mistakes. That is why experienced investors often ignore opportunities that sound too good to be true, because they understand that protecting capital is more important than chasing excitement. That mindset creates long-term survival, and survival creates opportunity, especially financially. That is why many successful investors focus heavily on risk management, not because they are pessimistic, but because they are realistic, because no investment is guaranteed, no market is predictable, and no strategy works forever. That is why humility matters, especially in crypto, because markets constantly surprise people. That is why emotionally mature investors stay flexible. They continue learning, they continue questioning, and they avoid becoming emotionally attached to easy money narratives, because emotionally attached investors often ignore warning signs, and ignored warning signs usually become expensive lessons later. That is why skepticism is a valuable financial skill, not negativity. Skepticism, because skepticism encourages research. Research creates understanding, and understanding reduces emotional risk, especially online, where anyone can appear successful, anyone can appear wealthy, anyone can appear credible. That is why independent thinking matters so much, because independent thinkers are harder to manipulate emotionally, especially during hype cycles. That is why long-term investors usually move differently. They focus on sustainability, consistency, discipline, and patience, because those principles survive market cycles while hype eventually disappears. That is why financial freedom is rarely built through shortcuts. It is usually built through repeated smart decisions over long periods of time. Remember, please, if something sounds too good to be true, slow down, ask questions, protect your capital, and think long-term.